The Pentagon says Russia continues to bolster combat forces near the Ukrainian border as tensions between Moscow and Washington are heating up. Meanwhile, a cold chill has blown over the crypto market, leaving many to speculate whether a crypto winter is upon us. And with inflation at a 40-year high, the Fed is signaling liftoff for rate raises. Well, here to discuss this and so much more is Anthony Scaramucci, founder of SkyBridge Capital and former White House Communications Director. Anthony, thanks for joining us here on Kitco.
Michelle, thank you for having me.
All right, let's start off with crypto, Anthony. The entire crypto market shedding more than $1 trillion in value since Bitcoin's all-time high. Bitcoin still down around 50% from its record high of nearly 69,000 in November. What is behind this sell-off?
So I honestly don't know the reason. It's probably a myriad of factors, but I think the most interesting thing is that Bitcoin is now very tightly correlated with the higher growth, higher risk NASDAQ stocks. But I just want to point out to everybody, Bitcoin has had at least 50% declines 10 times since 2012. In the last year, we've had two 50% declines, obviously the most recent one, but also one in May of 2021. And so if you're long Bitcoin, you have to subject yourself to these type of volatility moves. And I'll just point out to people in Web 1, the same sort of situation happened for Amazon. And if you were wise enough and disciplined enough to hold Amazon and let that company take full advantage of the network effects associated with it, you did very well. And I think that's going to happen with Bitcoin. I just remind people what Jeff Bezos said at the 20th anniversary of the public offering of Amazon. People said, wow, the stock is so volatile. How were you able to hang in there? And he said, well, I was more focused on users and revenue growth. And for Bitcoin, since it's a network, you have to be focused on the wallet growth and the interaction among the people in the network. And so I ultimately think Bitcoin will be worth $500,000. It'll probably take 4 to 5 years. The ride will be rocky, but certainly worth it.
So Bitcoin valued at $500,000, $500,000 in 4 years' time. Does that correlate with 1 billion crypto users, 1 billion crypto wallets? Do you see that linked to the adoption curve? Yeah.
Yes, I do. And I think that there's a lot of research on that. And people say, well, how can you value Bitcoin? Fundamentally, you can value Bitcoin related to the network. Remember what Robert Metcalfe, the MIT professor, once said: one fax machine is probably worthless, but 100 million of them is worth something. The network itself is worth something. And so people mistake that when they do their fundamental analysis on Bitcoin.
So safe to say you're seeing this dip as a buying opportunity?
I see the dip as a buying opportunity, but I also will tell people that there'll be more buying opportunities in the future. And so you're better off, if you want to own this asset, to make a long-term strategic decision, buy the asset and don't look at the asset. Because remember, we're human beings. Everybody is a long-term investor, Michelle, until they have short-term losses. The minute they have short-term losses, they change their investment appetite and behavior.
All right. Well, look, to that long-term argument, one of the common investment cases for Bitcoin is that it's supposed to serve as a hedge against rising inflation. You yourself have called it an inflation hedge, but we're not seeing Bitcoin respond to this higher inflation data now at a 40-year high. What's happened to the argument of it as an inflation hedge then?
Yeah, if I did call it an inflation hedge, and I don't know because I do a lot of interviews, I apologize for that because I don't see it as an inflation hedge. What I see Bitcoin as is an early adopting technological asset. I see this as a technology that has 2.5% global saturation. And as a result of which, if you study other technologies like this, they come with a very high oscillation and very high volatility. Could Bitcoin become an inflation hedge? I believe the answer to that is yes, but I think people are predicting out into the future. I'll point out that Amazon is way less volatile today, 25 years after its IPO. 10 years from now, Bitcoin will be 23 years old. It'll be way less volatile in my prediction because there'll be more users, et cetera. And then maybe then, if you and I are both around, you can interview me and I can tell you that it's an inflation hedge, but it's not an inflation hedge yet. And I think that's a mistake when Bitcoin maximalists get out there and say that it's better than gold. It may be better than gold, but we have to let the network effects take place so that we can actually really see that and analyze it. And we need that to happen as well for it to be a quote unquote inflation hedge.
Okay, well, you yourself have actually said that Bitcoin is better at being gold than gold is.
Yes, I do believe that. I do believe that. And I can explain that to you. Bitcoin is better at being gold because of its portability, because of the technology is in limited supply. Remember, 65% of the available gold on planet Earth has been mined. That leaves you 35% more. And so there'll be increases in supply as prices come on. And what's unique about Bitcoin is that it's limited to the 21 million coins. Maybe 2 or 3 million of them have been lost. And so when you just look at it from a box ticking exercise about store of value, Bitcoin hits more of those than gold does. But again, it's early. And so it's an early adoption story. It's going to come with volatility. I believe when Bitcoin is mature, it will be quote unquote more valuable than gold because of all of the technical properties associated with it. So again, 10 years from now, I'll make a prediction that Bitcoin has a larger market capitalization than gold. And it took gold 5,000 years to get to its current market capitalization. Bitcoin will surpass that under 25 years from its inception.
So you're seeing Bitcoin as mainly drawing money from those that typically invest in gold, that money shifting into Bitcoin. That's where most of the investment into Bitcoin is coming from, at gold's expense?
I would say a large portion of it is there. Some of it is early adopters that love new technology stories. I would say there's a group of people that have made a decision that the central banks have become sloppy with our fiat currencies. I don't want to say anything too negative about Jerome Powell because I think he's by and large done a good job given the metrics that he's being measured by. But in a pandemic, we pushed out 42% more dollar volume. So just imagine that people are asking about inflation. Well, of course you're going to have inflation. If you added 42% more dollar volume to the Federal Reserve supply of money, the M2, well, then of course there's going to be inflation. I think people are looking at that and saying, okay, well, wait a minute, that's quite corruptible. Bitcoin, because of its decentralization, there's strength to that. It's less corruptible. I want to own this asset because if this continues, this sort of negative flywheel of Federal Reserve and other central bank monetary policy continues, I'm going to need to be in a safer haven. And I think as Bitcoin matures, it will become that.
All right, well, we will circle back to Jerome Powell and what we can expect from the Fed. But I do want to focus first on your overall views on Bitcoin, because you were a big Bitcoin skeptic, then you changed your mind. I applaud you for that. You took the orange pill. Is there anything that could make you change your mind again? Is there any reason that you could see yourself going, you know what? Turns out I was wrong about this whole Bitcoin thing.
Listen, I've been humbled by life, Michelle. I've been humbled by markets. I've thought things that were true that turned out not to be true. And so anything can happen. I think if for some reason there's regulatory pressure on Bitcoin that I don't understand, that is less than predictable on the landscape, that could be one of those reasons. I don't think it'll be the technology. However, we've had 12 and a half, 13 years of Bitcoin. It's proven to be a stable network and one that's unhackable. Some people say that quantum computing will come into gear and hack Bitcoin. I'm skeptical of that because I think Bitcoin will also, on the network side, have quantum computing, so they'll balance each other out. But yes, there could be something. There's no certainty in life. I tell people, let's allocate to Bitcoin appropriately. It's a 1% to 5% position at cost for now. And so, yes, I don't know, the beauty of the markets is the markets are very humbling and you never know what's going to get you in the markets. And I have found that anything you think that doesn't happen or can happen, Michelle, invariably does. So I don't want to rule anything out, but I like what I see. I like the blockchain for sure. The blockchain is a massive delayering mechanism for the global economy. And so the blockchain will be with us for multiple decades, if not forever. And we're going to see a lot of things liquefy that previously weren't liquid as a result of the blockchain. And I'm excited by that.
All right. Yeah. The only thing that's constant is change. The only certainty is uncertainty, to your point there, Anthony. So let's focus on regulation because, as you just mentioned, it's still a risk, a known unknown. We've heard from the IMF. It's urging El Salvador to discontinue Bitcoin status as a legal tender. The International Monetary Fund getting quite aggressive in its messaging, saying cryptocurrencies and stocks are going to see more volatility, emphasizing the increased correlation between the two asset classes, and now saying that cryptos create a systemic risk. You know, those are big words coming from the IMF. We know that the Biden administration, according to Bloomberg, reportedly going to release an executive order that will outline a comprehensive government strategy on cryptos and then ask several federal agencies to determine their risks and opportunities. What would you say your outlook is on crypto regulation here in the US?
Well, those two measures are actually bullish. So just imagine this nascent token, this nascent cryptocurrency 10 years ago with a very minute market cap, people laughing at it as being irrelevant. Now there's $1.5 or $1.7 trillion of total market capitalization of all cryptocurrencies, Bitcoin being the alpha predator of those, probably 40 to 45% of the overall market cap. And so it's now sizable enough where the IMF and the US government have to pay attention to it. So I'll predict three things. This will go way slower than Bitcoiners would like it to go. Number two, there's a lot of Bitcoiners out there that are libertarians. They want absolutely no regulation. Too bad on that. You're going to get some fairly stringent regulation. And number three, despite governmental attempts, whatever they may be, Bitcoin is with us to stay. The Chinese government is always saying they're banning Bitcoin or we're getting rid of Bitcoin, but they know Bitcoin exists in their culture and in the system. It can be stored on a USB and carried around in somebody's pocket. So it's not going away. I have taken the belief, and perhaps this is too optimistic, that Bitcoin will be okay in the United States because it already has been deemed as property by the IRS. And so the IRS treats Bitcoin as intangible property. I didn't learn many things in law school. I think one of the first things I learned, Michelle, was not to be a lawyer. That was an obvious thing I learned in law school. But secondarily, property rights in the United States, United Kingdom, places like Singapore are quite sacrosanct because they all tie back to British common law. And there's a 900-year legacy of legal precedent that protects property. And so the IRS has already said Bitcoin is property. It's going to be very, very tough for the United States, given that designation, to ban Bitcoin or to overly regulate Bitcoin. There would likely be administrative court relief because of it. So it's going to exist. Guys like Gary Gensler are super smart guys. Before they got into the regulatory rubric and are wearing a political hat, he was teaching a course on blockchain at MIT, and he was espousing the virtues of blockchain. And so I don't think he wants to cede the intellectual capital and all of the potential business opportunities and jobs that could come from the cryptocurrency industry to other countries. So my guess is that they'll come up with an answer here. And I'll say one last thing, because I think this is important. The progressives I cannot figure out because they don't like the big banks. They know that decentralized finance can help the underbanked. It's a long-term reduction in fees, and it's an empowerment movement for poor people, ultimately, if you really understand it. And yet they hate it. So they don't like the big banks and they hate Bitcoin. The only thing I can surmise is that they think that some people are getting rich on Bitcoin. And of course, we know socialists hate rich people and they hate seeing people get rich. So maybe that's the reason. But I think it's a big mistake. This is happening, and they're not going to be able to stop it. And just remember, the regulators wanted to stop Uber in the United States.
Yeah.
And the people won out. The people wanted Uber, and the regulators weren't able to stop it. Bitcoin currently has 47 million wallets. You've heard of a decentralized autonomous organization. Well, yeah, Bitcoin is a DLO. It's a decentralized lobbying organization. Don't forget that about Bitcoin. There's 46 million people that are political activists as it relates to that one political issue.
So you're surprised that it's not getting more support from those on the left that, as you say, are very critical about Wall Street and big banks and big finance, that this should actually be seen as something that they should support, considering it empowers individuals. But
yes, I am surprised. I am surprised by that. But these are people that are They like control. They like command and control. Ultimately, they think they're smarter than the other people. And so they think that we should be living under their dictation of what's right or wrong. And what I love about Bitcoin, it's a libertarian idea. And I think it's an individualism movement, if you will. And I think it'll win out.
All right. Well, one of the senators that's been very vocal against Bitcoin and cryptocurrencies is, of course, Elizabeth Warren. She's also been very vocal against Jerome Powell, who you mentioned you think will be able to get a handle on inflation. Do you think that he has enough fortitude to stand up to what could be a political pushback if he does raise rates during an election year, which will undoubtedly cause, we're already seeing the market respond to that negatively. Do you think that Powell can successfully rein in inflation?
So I do. Maybe I'm in the outlier community. I think that this is a supply chain issue, and I do think that it's transitory. Now, it just happens to be longer than the word transitory's definition. So maybe it's extra transitory. And I'll just point out to you that you have to see through the current debacle and look long term and recognize that the supply chain has been disrupted by many, many things, but including the zero tolerance policy for COVID in China. So they're shutting down factories, they're forcing people into quarantine, and it's slowing down the production of a lot of things that go on in the manufacturing world. And then you have all the issues related at the ports and the shipping containers and so forth. And so I just want you to imagine 12 or 18 months from now where all of that is abated, and then stop and take a look at the macro forces of technology. The technology is primarily deflationary. So I think Jerome Powell is going to surprise to the upside. I don't see 4 to 6 interest rate hikes this year. You may get 1 or 2, but I don't think you're going to get much more than that.
So you see 1 or 2 rate hikes this year, and yet you see inflation abating because you do think that it's primarily a supply chain issue. And even though Powell has backtracked on the use of the word transitory, extending its meaning to a more permanent sense of transitory, you still think we're going to have inflation under control with just 1 or 2 rate hikes this year?
I do. And if we get 3, I'm off by 1. This is an approximation. We're not getting 4 to 6, though. I could say that pretty definitively. And I do think that, and remember, he's in a tough job because he's trying to execute policy that makes sense for the world and the United States, but he's also a politician. He has no choice to be a politician because of the rhetoric that's thrown at him and the political pressure that he's experiencing in Washington. So for whatever reason, the markets have opined that this is quote unquote non-transitory. So even if the data suggests that it is, he's not going to say that anymore. The other thing I think he's done a masterful job of is jawboning and getting us down to a market, meaning, markets dropping 15%, which is basically telling you that he's correcting through jawboning some of the excesses, which I like.
All right. But with this correction, you do have some concern that the economy can't actually handle it. David Einhorn, Jeff Gundlach, to name a few, worried about a looming recession, that the Fed isn't going to be able to engineer a soft landing, that the Fed is going to have to take a more aggressive position in tightening policy, and that could cause too sharp a slowdown and a recession. Doesn't sound to me like you're concerned about a recession here.
Oh, you could have a mild recession. But by the way, I don't want to, those are 2 of the smartest people I know in our industry. So it's not necessarily that I'm going to bet against them. When I hear them say those things, it opens my mind to those potential statistical permutations in terms of outcome. But I think the base case outcome is going to be a soft landing or a mild recession. Remember something about the world right now. We are pent up. I don't know about you, but I'm going to Disney World when this is over. And I am ready to break out. And I would imagine there are tens of millions of people all over the world, specifically here in the United States, that want to do that. So you could have savings rates have gone up. You could have tremendous consumption activity when the pandemic is more mild or eventually over. Don't underestimate that, is my point. Just offering a contrarian view.